the immediate next week, a very important financial event is going to happen, and that is nothing but Union Budget. Now, exactly what is this Union Budget? It's nothing but India's annual financial statements that talks about what is the estimated revenue and what could be the planned expenses for the upcoming fiscal year. So what we have to do is we have to focus on some key points in this entire budget. So typically the budget speech runs for 1.5, sometimes 2 hours, so a layman can get confused on what should we be focusing on and what should be ignored. So today we are going to talk about top 3 points which can impact your pocket and also the stock market. So keep on watching the video till the end. The very first point that you should focus on is fiscal deficit. In simple words, fisc means government and deficit means a shortfall or a negative figure which would be the difference between expenses and incomes. So let me explain this with the help of a simple example. Assume that the government's income is 25 lakh crore rupees. For the time being, just ignore lakh crores. It's 25. And the government's expenses is 40. Of course, 40 lakh crores. So what is the difference? Difference here would come out to 15. This is as good as Amdani Athani Kharcha Rupiya, but for the government. So what is a general thumb rule? Thumb rule will be that if the deficit is lower, then it is going to be the better. If we are in a surplus, wow, that will be amazing. But of course, India is in a deficit. What do you think about US? Would US be in a deficit or in a surplus? Let me know your answer in the comment section. I personally feel many people may go wrong. Okay. Now coming back to our fiscal deficit scenario, what we have to check is what are the latest figures that are available with us. Right now, the financial year 25 estimated fiscal deficit stands at 4.9% of GDP. Of course, I hope you have understood that fiscal deficit is always expressed in terms of percentage GDP. So currently estimated figure is 4.9%. So what do we have to check in the budget? Whether the revised estimate is at 4.9% or below 4.9%. If at or below 4.9%, that will be a big thumbs up. Stock market will definitely see a nice mood if this happens. But if the estimated figure is above 4.9%, stock market will definitely react negatively to this news. Also, one more point, typically a target for next financial year is also given. So the target for FY26 currently stands at 4.5%. But if this number is also revised upwards, that will be taken negatively. If this figure is revised downwards, then it will be taken positively. What is happening with the overall trend of fiscal deficit? If you have a look at this, you can see that in the last 4 years, that is from 21 to 24, fiscal deficit has been rapidly decreasing. Of course, 2021 was a sharp boom that was almost 9.2%. Of course, everyone understands the reason. It was because of COVID. But right now, we are drawing down the gap between expenses and incomes. So always remember the final point to be checked, fiscal deficit, whether the government is giving lower numbers or not. If lower, better for the stock market. Before we move on, let me tell you that we are celebrating the Republic Day by offering special discounts on our website www.rachanaranade.com. All these courses will help you to level up your game in the field of stock markets or mutual funds or personal financial management as well. So if you are planning to invest in knowledge, don't forget to use the coupon codes India for enrolling for any single course and the coupon code Tiranga if you're enrolling for any combination course. If you want to know more, please don't forget to check out the link in the description box and pinned comment below. Let's move on with the next one, which is about taxation. Be very careful while watching this section of the budget because that's directly going to impact your pocket. So there could be multiple angles here. Number one, there could be a change in basic exemption limit. Possibility number two, it could be about the standard deduction that you are getting. Possibility number three, it could be about change in the rebate. Or possibility number four, it could be about change in the tax slabs that are currently applicable. Please don't expect all four to change. एवढं नाही म्हणत. Either or could change, right? So just as an example, if basic exemption limit is enhanced, what will happen? You will ideally have to pay lesser taxes. If you pay less taxes, is your pocket going to be happy? Yes. Is the government going to be sad? No. Government is also going to be happy. Why? Because if you pay less taxes, you will be left with more disposable income. If that be so, ideally there are high chances that you will increase your consumption, and if consumption increases, you are going to pay more GST, and that is the reason why government will be indirectly happy. In fact, that is the thought process in many countries, that just try and reduce the burden of taxes on the middle class people, so that effectively more income will be left in their hands. They'll consume more, and ultimately you're collecting taxes from them, but not in the nature of direct taxes, but in the nature of indirect taxes like GST. Next thing that you have to look out for is about change in the capital gain tax. I'm sure you know about the current taxation about LTCG on equity and STCG on equity. For LTCG, it is currently at 12.5%, STCG is at 20%. If this is taken to a higher percentage, I'm sure stock market is going to react absolutely negative to this. Hopefully, these remain unchanged in this budget, and please don't expect this to be lowered. Okay. One more point that we are going to understand is about the corporate taxation. Corporate taxation currently stands at 25% and 30% based on the turnover criteria. Again, this being lowered is something which I really doubt. But if it does get lowered, then again, stock market will give a big thumbs up. If this is increased, stock market will react negatively. The next thing that you should focus on is about PLI schemes. Now, what is this? That's a production linked incentive scheme. Please listen to the budget carefully and try to see which sectors are offered this PLI scheme. Now, why are these schemes introduced? There could be multiple reasons. Possibility number one, it could be to increase the domestic manufacturing, basically based on our theme of Atmanirbhar Bharat. It could be to reduce the dependence on imports. It could also be something for maybe job creation as well. So, assume that a specific sector is given the PLI scheme. Typically, it has been observed that stocks from that sector start to see a run up. Now, why does this happen? See, if the PLI scheme is given to a specific company, okay, in that sector, possibility number one, it could reduce the setup costs, it could reduce the manufacturing costs, and if that be so, the overall profitability margins for such companies could increase. So, all in all, what do you have to check is which sector receives the PLI, and if that be so, try and find out fundamentally strong stocks from that sector, and then you can take a call whether you want to go ahead to buy such companies or you would just want to add it to your watch list. Well, I hope you have understood about the top three things that you should be. GST. The fear factor has really kicked in with these three alphabets, GST. In fact, yesterday we went out for a movie, she didn't even have a popcorn. Anyways, by the way, GST rates are not discussed during the budget. They are discussed during GST council meetings and they are released via press releases. ठीक है ना? Okay. She's saying okay. Fair enough. I hope you have understood the top 3 points that you should be focusing on while the budget speech is being given by our finance minister Nirmala Sitharaman ji. And if you feel that you would want to know a little bit more about budget, please don't forget to ask your questions in the comment section below. Me and my team would love to answer your queries. If you did find some value in today's video, don't forget to smash the like button. Don't forget to share this video with your friends. I'll see you in the next one. Till then, take care. Jai Hind and bye-bye.